Managerial accounting is vague and flexible. Some of the topics can be confusing and the vocabulary isn't super intuitive. If you're skipping around and watching random videos, I highly suggest you do not start with this one. You see, in order to best understand this next video, you really have to watch all the other managerial accounting videos that we've posted. See, what we're gonna do here is we're gonna make a hypothetical company. Our hypothetical company is gonna go through all the 4 main topics of managerial accounting: standard costing, activity-based costing, throughput analysis, and cost volume profit analysis. Are you ready? Let's go. Our hypothetical company is gonna be a car company. We make cars. And we're gonna use our throughput analysis to find our break-even point. We're gonna use our activity-based costing in order to find our true product costs. Then we're going to use cost volume profit analysis to find out how much we should make and how much we shouldn't make. Then lastly, we're going to use standardized costing to forecast next year's budget. This is going to be a lot of work, but don't worry, we're going to go slow to make sure you guys completely understand all the tools that managerial accounting has in store for you. Before we dive in, we have to cover a few things about our car company. You see, we make 2 different types of cars: fast and luxury. Every car has a few direct costs: direct material, and direct labor. There are also a few other costs, such as factory rent, utilities bill that we pay, advertising costs, and we do actually sell with commission. So you'll see that a few of our salespeople make commission off each car that they sell too. Each car goes through the same process. They have to be assembled, they have to be shipped, and they have to be sold. I think that's everything that we need to know at this point in time, so let's get going. Before we start diving into costs, let's first figure out our process. Throughput accounting can help us with this. Remember, every car has to be assembled, shipped, and sold. Remember, we make 2 types of cars: fast and luxury. So let's dive into each process for each car. See, our assembly process takes 3 hours for fast cars and 4 hours for luxury cars. The shipping process takes 1 hour for both types of cars, fast or luxury. The sales process takes 2 hours for fast cars and 5 hours for luxury cars. Now we know about how much time and resources each type of car takes. But how much time and resources do we have? You see, our car company only has 1,000 hours of assembly hours, 500 hours for shipping hours, and 2,000 hours for sales hours. So, which type of car should we prioritize? What's our bottleneck? Let's dive in and figure out. Let's first start with fast cars. The easiest way to identify our bottleneck is to say, okay, if we made nothing but fast cars, how many cars could we make? So let's do the quick math on that. Okay, we have 1,000 total assembly hours we can use. Each fast car takes 3 hours to assemble, so we can make 333 total fast cars. Not too bad. Now let's look into shipping. We have 500 total shipping hours. Each car takes 1 hour to ship, so that makes 500 total fast cars we can ship, more than the assembly. So, as of right now, assembling is our bottleneck. But let's dive into the sales process just to make sure. We have 2,000 total sales hours, and each fast car takes 2 hours to sell, so we can make 1,000 cars based off our selling process. So we can make 333 cars assembled, ship 500 cars, and sell 1,000 cars. So what's our bottleneck? It's going to be assembling. Assembling has the least amount of capacity that we can possibly use. Remember, capacity is the total amount of product you can create in one given process. However, is assembling also going to be the same bottleneck for our luxury cars? I don't know. Let's do the math again. If we made nothing but luxury cars, how many cars could we make? Well, 1,000 total assembly hours divided by the 4 hours it takes to assemble a luxury car gives us 250 total luxury cars we can assemble. Our shipping, we had 500 shipping hours we could use. Each luxury car takes 1 hour to ship, so we can ship 500 cars, more than the assembly. So as of right now, assembly is our bottleneck. But let's look at sales. We had 2,000 total sales hours. Each luxury car takes 5 hours to sell, so we can sell 400 total luxury cars. So, what's our bottleneck on the luxury car side? Still going to be the exact same as it was for the fast car side. Remember, we look at total capacity, which is the total amount of product you can make in one process. For luxury cars, we can only assemble 250 total cars, while we can ship 500 and we can sell 400. So assembly is going to be the process that's our bottleneck. Now we need to understand how many fast versus luxury cars to make. We can do this by looking at throughput profit per bottleneck resource. Remember, the bottleneck resource for both the fast and luxury cars was assembly hours. So let's dive into this process right now. Remember, throughput profit is just sales minus direct costs. So what are our direct costs for both the fast and luxury cars? In our situation, direct costs are going to be direct labor, direct materials, and sales commission. We can track all three of these categories of costs directly to one individual product. Let's say that our sales commission is 10% of the selling price. That's what we pay our sales reps. Let's say that direct materials is about $10,000 per car, whether it's fast or luxury. Now, where they differ here is in the direct labor side. See, we pay our employees $10 per hour, but it takes only 500 hours of employee labor to make a fast car. It takes 1,000 hours of employee labor to make a luxury car. Now, these are all just hypothetical numbers that we're making up on the go. So we're also going to say that we sell fast cars for $30,000 and we sell luxury cars for $60,000. So what is our throughput profit? Well, our fast cars' direct costs are $10,000 in materials, $5,000 in labor, and $3,000 in sales commission, for a total of $18,000. Now, if we sell our car for $30,000, $30,000 minus 18 gives us $12,000 in throughput profit per fast car. A luxury car's direct costs are going to be $10,000 in materials, $10,000 in labor, and $6,000 in sales commission, for a total of $26,000. But we sell luxury cars for $60,000. So $60,000 minus $26,000 gives us $34,000 in throughput profit per luxury car. Now that was just figuring out throughput profit. Now we have to find out how much of throughput profit we use per bottleneck resource, which is assembly hours. So how many assembly hours do both fast cars and luxury cars take? Well, we know this from our previous work. We know that fast cars take 3 assembly hours and luxury cars take 4 assembly hours. So all you do now is divide your throughput profit by those numbers. So for our fast cars, we divide that $12,000 in throughput profit by 3, and we find that we get $4,000 in throughput profit per assembly hour used on fast cars. That's going to be a number we want to keep in mind. Now let's do the same for luxury cars. A luxury car takes 4 hours to assemble, so we divide our $34,000 in throughput profit by 4, and we find that we get $8,500 in throughput profit per assembly hours used on luxury cars. Now all we have to do is compare those two numbers. Which one's higher? Luxury cars by a mile. Actually, almost doubles it. So we should use as many assembly hours as possible on luxury cars. But let's say that we can only sell 100 luxury cars. There's just not a huge demand for luxury cars because they're expensive. So then how many total fast cars can we make, and what's our future total profit going to look like? Well, if each luxury car takes us 4 assembly hours to make, and we're going to make 100 luxury cars, that's 400 assembly hours used. Now we only have 1,000 total assembly hours, so how much are left for fast cars? Well, 1,000 minus 400 gives us 600 assembly hours left to use to make fast cars. Now fast cars use 3 assembly hours to make. So 600 divided by 3, we can make 200 fast cars with the remaining assembly hours. So what's our total throughput profit going to be if we make 100 luxury cars and 200 fast cars? We just kind of start looking at some of those numbers we looked at earlier and just start multiplying them together. 100 luxury cars times the $34,000 in throughput profit per car gives us $3.4 million in throughput profit from our luxury car sales. 200 fast cars times the $12,000 in throughput profit we get from them per car gives us $2.4 million in throughput profit from the fast cars. If we add those together, we get $5.8 million in expected throughput profit for next year's sales, based off selling 100 luxury cars and 200 fast cars. Now that was a lot of work, and that was just the first out of 4 steps that we're going to go through with this example. However, let's look at what we learned. 1, we found our bottleneck. We found that assembly hours is really what we're lacking. If we are going to invest any money somewhere in our assembly process or in our just car making process in general, we would invest in the assembly hours. We'd try to hire more assembles, buy more assembly machines, things like that. Second of all, we found our optimal mix of luxury cars versus fast cars given the current market demands. If market demands change, let's say that we can sell 200 luxury cars, or we can only sell 50 luxury cars, that mix will change as well. But now we know the process to go through in order to figure out exactly what that mix is going to be. And once we have that mix, we can actually then create an expected throughput profit in total from all of our sales by multiplying the amount of luxury cars we make times their expected throughput profit. Now remember, all these numbers are just kind of guesstimates, but these guesstimates are as accurate as we know they can be. And over time, which we're going to talk about when we looked at standardized costing stuff, these are going to get a little bit more accurate as we have our car company for longer periods of time. But for right now, we avoided a lot of costs by just focusing on only the direct costs that we have. We didn't talk anything about the electric bill, or about the factory rent, or about our advertising expenses. So let's get into that with our activity-based costing.